for the door to close. 3, there it goes. I know it was going to happen. Maybe not. All right, 3, 2. Welcome to Drill Down Earnings. We have quarterly results out from Fabrinet, one of the 50 most important companies in technology. I'm Cory Johnson, Chief Market Strategist for Epistrophy Capital Research. We focus on those companies because those are companies changing the world. We focus on this company also because I own the stock, so that's not where I focus on it, but it's a bias that I have. I want you to be aware of that. I'm not trying to give investment advice, but there's a company that I think is going to do well. I think it is doing well. Fabrinet, it's a smaller company than some of the big companies we cover here, but they provide advanced manufacturing services for complex optical, electromechanical, electronic products in high precision packaging, assembly, and testing, but it's really focused on optical. That's what's interesting to me is optical communications and lasers for automotive industry, medical devices, data center stuff in particular. And that's what I want to drill down in a little bit here because, this is the drill down. Why not? Q4 earnings for this company were better than the street expected, $910 million in revenues, $87 million in GAAP profits, non-GAAP profits, a little better than that. 21% growth in the data center, or driven by data center business and by telecom. So, and profitability, as I mentioned, 10% operating profits in the quarter, better than they've seen now for years. I'm focused on this company because of their optical communications business, which did well. The optical communications revenue was up to $689 million, 15% on a year-over-year basis, led by telecom, not by datacom. So a lot of people like me are in the stock thinking this is going to benefit from the data sector, and it did, but the telecom sector did fantastically, up 46% on a year-over-year basis. We'll get to why that's tricky. So their datacom business, however, they're in this transition going from 800 gig to 1.6 terabyte. And because of that transition, they might have seen a little bit of a slowdown in the quarter. They did $313 million worth of business in the 800 gig products, up 32% quarter over quarter. But the ramp to 1.6 terabyte transceivers, despite some supply constraints, they say is happening for them right now. Automotive also doing nice again. So their business is 31% datacom, 45% telecom in this quarter, with some automotive and industrial rounding things out. Now the datacom business cooled, to be sure, down 12% on a year-over-year basis, and telecom exploded. But here's the thing, within the telecom sector, they have a datacom interconnect, a data center interconnect. So if you think about it, when they're building data centers, the first thing that happens is they scale up. They build these fantastic machines, connecting usually NVIDIA chips, NVIDIA Grace or Hopper or Blackwell chips to do this sort of initial understanding of large language models, the training of those models. But then the access to those models is the scale out. And that's where the datacom interconnect business is. And these guys put it into their telecom bucket. All right, whatever. But when we think about what's happening here, they're still getting a lot of data center business, but it's showing up in their telecom bucket as well as in their datacom bucket. So how did the stock react when these numbers came out? The market was a little bit confused by these numbers. So the stock was down 10% in after hours trading after initially popping way up, still at 42% for the year. So no one's complaining much, but not me, even though it's down 10% in after hours. But I think the market might look at these numbers and they start to figure out that the datacom interconnect was in the telecom numbers. And this is still a data center AI story. I think it's also worth noting here that they give us a number of how much is 800 gig or faster and how much is the old stuff. And in this quarter, we saw that the faster 800 gig stuff was growing at a 21% basis, whereas the other stuff was only growing at 4%. I suspect we might see that trend accelerate even more so in the coming quarters. They're also spending a lot of money to grow. So they're building 10, adding 2 million square feet of capacity. They talked a lot about that in the conference call and in the press release. Here is Fabrinet CEO Seamus Grady.
DCI business has been very strong. We've captured a number of customers there. They're all ramping, and we're able to keep up with the demand. And the demand seems to be, it's strong, it's robust, and it looks to be durable. And it is increasing over time. So I think as these big data center, clusters get rolled out, these big AI workloads get shared around between data centers, the need for DCI is increasing, if anything. So we see DCI demand continue to be very strong for some time to come.
And would you expect someone named Seamus to sound anything but like that? All right, well, what's it all mean? What's your big drill on earnings takeaway? The drill on earnings bite, the one number that tells us a whole lot. So Fabrinet Q4 earnings, fiscal year 2025 Q4, your essential summary tells you that this company saw 21% revenue growth, now over $900 million in the quarter, a nicely profitable quarter with 10% operating margins. But I think the big number that you want to take away from this, the drill down earnings bite, the one number that tells you a whole lot, is that the datacom business cooled off, down 12% on a year-over-year basis. Yes, they had data center interconnect business in their telecom unit that did really well, but still, datacom cooling, maybe not with some of the bulls like me, people who own the stock. This is an investment advice, but I just want you to know my bias. People who own the stock like me maybe thought the datacom business was going to do a little bit better. All right, thanks for checking out Drill Down on Earnings. Follow me, please, on Twitter or X, whatever you want to call it, @CoryTV. And of course, TikTok, Instagram, and on YouTube @Drill Down Pod.